All right, everyone, here we are with ticker symbol KNDI, Kandi Technologies Group Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Kandi Technologies Group has been breaking through resistance level, through resistance level, through resistance level. Obviously, it had a run earlier in the year from way down here around $3 and some change, all the way up to $19, almost hitting $20, dipping really fast, and it's been in a really sideways movement for some time. And here we are after hitting this recent low here of about 618 when it was actually in sideways movement and recovering from the lows here of about 514, 515. And here we are seeing it break resistance level through resistance level through resistance level. I mean, it hit highs here of about 915 and it leveled off at 836. So we're going to want to see this closely and what is important for tomorrow and for the next coming days. So we're going to look at our resistance level and we're going to look at our support. Some important things here for this one specifically is the fact that right now it's above the 50-day moving average. And the question is, could the bulls keep themselves above it? So the 50-day moving average is 727. 727 is right now what's letting us know if we're in bullish territory or if we're in bearish territory. We're currently in bullish territory, and for the bulls to maintain that, they need to break through 867, turn that into a support, pull away from it, hit new highs and new resistance levels. Their next goal after that would be 915, being the highest point reached in this recent run. And from that point forward, this could hit and obtain new resistance levels and newer highs, pulling further away from the 50-day moving average in an upward direction. But before getting there, 867 is the first resistance level that needs to be turned into a support so that the bulls can continue to run up and hit new highs. Now, on the other side, the bears. The bears' lowest point of the day was 786, and the second lowest was up here at 788. But this is the lowest support level reached when the bulls reappeared from those lows, and they were slightly leveling off, and they continued to bring this up, leveling off at 836. So this is a significant support level, because if it's broken through, then your next point would be 786 to pay close attention to. And then the next point is watching how this stock reacts between 786 and down here at 727, being the 50-day moving average, which you're still in bullish territory, but you're going to want to see the behavior of the stock. If the bears are dominating this one, getting it closer to the 50-day moving average, or are the bulls trying to reappear? But before worrying about any of those numbers, the first support level is 792. Pay close attention to how this stock is reacting as it gets closer to it, or if it breaks through it. And are the bulls trying to reappear and bring this back up, or are the bears on their way to break through the support, pull away from it, and get closer to the 50-day moving average? As always, I hope that these cues are helpful and informative for tomorrow's trading day. If you feel encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.